Hi guys, how you doing? Thanks for tuning my YouTube channel. This is my second video. I know it passed a lot of time from the first one, but I work alone and sometimes I think too much about the possible trend of an industry. I'm working to try to accelerate my thinking process. I'm here to analyze Bristol Myers Squibb and tell you in the process what I think is a good investment. If you want to check it out, my last video related with Ulta Beauty, please click in the upper part of your screen or find the link in the description below. Well, here is the disclaimer. Please read it. This video and its content is only for educational purpose. So if you want to invest in any stock, please do your own research. Well, these are some of the questions that I want to answer with this presentation. I try to make a simple process because I think it's the best way to find a stock that could outperform in the future. Well, in this slide, there are several reasons why I think this particular stock is cheap, but basically it's that right now it's not a fancy industry like tech or electric. Also, there's a real obsession with trying to find the next Tesla. So people are more focused in the future possible cash flow than the current year-to-year cash. And the last reason I think investors are skeptical of the year 2023 when Revlimid lost the exclusivity. I don't know if I pronounced well the name of the drug, but it doesn't matter. Let's follow. Well, if you don't know this company, this is the one of the largest pharmaceutical company in the US, and they sell all kind of medication around the globe. The main focus of this company is oncology and hematology. They try to find the best solution for different type of cancer and disease. You can see in the picture that they have different products in their portfolio and also a lot of active clinical drugs in development that I will talk later in the presentation. They have around of 63 drugs in the oncology segment and a lot more in the pipeline for being approved. First, I want to talk about cancer. I know it's not a pill for people in general, but for my analysis, this is very important information that you need to be aware. In this slide, you can see that cancer is the second cause of death in the US, and that is in line with almost other major countries in Europe and in Asia. Thus, heart disease and oncology are areas where pharma has a lot of opportunities for discover new treatments, new drugs, better procedures for improving people's life. In the following slide, you can see the annual number of new cancer cases in the US is more than 1,700,000. That number is concentrated in people from 60 years to 85 or so. In my view, this is a very important information that you need to understand and be aware to take business decisions looking for the next 10 or 20 years. In the next slide, I'm gonna to emphasize in this data. Well, here you can see where as a society are we going to. The number are really shocking, and we can see that in 2040 almost 20% of the population in the US will be 65 year plus older. And the trend is even more alarming in countries in Europe and in Asia. So no matter in what business you are, you need to consider new products and services for the seniors. And the reason are mainly because the number of newborn child is decreasing all around the globe. The life expectancy of the senior is increasing, and they obviously have more purchasing power than the younger ones. Well, oncology trend. You can notice that oncology spending has been in a really sharp uptrend since the years 2015 or so, and the compound annual growth rate has been around low double digits. So with all this information, it's feasible to say that the uptrend will continue. I like to be more conservative, so I will say that the growth rate could be between 6% or to 9%, just only for my scenarios. But to conclude, if the market continues this uptrend, we can expect a 265 billion oncology market in 2024. So if Bristol can take 20% of the cake, could get revenues around 53 billions only in the oncology segment. It's important to say that the company develops drugs in different areas, not only in oncology. They work also in hematology, cardiovascular, and immunology that could boost the net sales even higher. Now, pharma industry is a very fragmented market. In this slide, you can see a lot of different participants who compete with each other for the market share. It is estimated that Bristol will have around the 20% of the cake in 2024. So in my view, this kind of environment has a lot of different opportunities and problems to resolve, not only for new drugs and new products, also for possible acquisitions of smaller and well-managed participants. What I'm trying to say here is that you want to invest in this type of environment when you can find a well-managed company that could outperform their competitors. The next slide is the net debt EBITDA. Has been really low until 2019. This increase is related with the acquisition of Celgene. I know this photo, this image could alarm some investors, but really the important point to be aware is how management is allocating capital of that loan. If the managers buy foolish stuff, obviously could be catastrophic for the company. In this case, it's different because they bought Celgene, a remarkable business with a wonderful Revlimid drug that generated 12.1 billion in net sales in 2020. Another point important to consider is that the commitment of the managers and the company to reduce the debt to 2024. So here we can see the executives of the company. Their income is pretty common in this type of industry. The important thing here is, for me obviously, is how much percentage of the annual income is related with the stock awards. As you can see here is an underlying incentive for the managers to do things in the best way possible. This is obviously directly proportional to shareholders' interest, so it's important to have soldiers fighting side by side in this sort of quest. Finally, we can see in the image of the left the quantity of shares each manager has. Of course, all people are important here, but in this case, we can make sure that the managers who make big decisions are aligned with the shareholders' views. For example, if a CEO last quarter sold 80% of the shares, this move is pointing you that something weird is going on. So to conclude, the CEO has almost 30 million in stock. That's, for me, means a lot. This slide represents the company last 8 years of stock outstanding. As you see, the increase is related with the Celgene operation. This is not the best situation, and I know it's better decreasing than increasing, but the commitment with the shareholders to repurchase 3 to 4 billions makes me very calm about the future of the company. For me, the managers must be aware of the underlying potential of the stock buybacks. Obviously, it's important not to repurchase at any price because that is a warning, in my view, that they don't know how to allocate capital. Financial highlights. The important thing here is that the strategy of Mr. Giovanni Caforio is working. He started as CEO in May in 2015. We can see that he and his colleague are making a good job. So what we want to see is an uptrend. That's simple. The price of the stock in the long run will follow this number. Well, this is another important slide for me. We can see that the compound annual growth rate is almost 20% of the earnings per share. So imagine if you put 10 grand in a bond attached with 20% growth rate, you eventually will make a lot of money. The moral here is that patience is it's a thing that you need to develop. It's a virtue in this type of business. In the following slide, you can see the return on equity of the company. The last 4 years has been pretty strong. Obviously, we can see a decrease in 2019 because of the acquisition of Delgene. But this move, as we saw in the last slide, generates tons of money for the company. In my view, the company has a sustainable way to do business, and this ratio helps you to understand if the company is doing better than average. So let's dive into the good stuff. Please remember, this is not a perfect science, so numbers could change if you do your own research. Well, this is the scenario that I think is very likely to happen. Why? Because I like to be conservative, meaning that less perspective I have, more excellent surprises will come. I really think you must have a longer term perspective because you avoid get confused with the year-to-year price projections. I use an average of the last 7 years in the ratios, PE ratio, price free cash flow, etc. You can see the ratios in the lower right of the picture. This means that I think I could sell my stock in these multiples. Obviously, you can take the multiple that you like, but again, I like to be conservative. You can see my considerations below. So the rate of return could be 9% each year, plus the dividend could be near 10.5% or so. Pretty good, in my view, considering the valuation in the today stock market. This is the second scenario. This is pretty optimistic. I consider that debt will decrease, like Bristol said in their past presentations. The growth will continue super strong, and buybacks will continue according to company commitment. I will say that it's possible. Of course, it's possible, but you know, I put this here just for the optimistic people. And the last scenario is the worst of the three. You can see the considerations below the picture. Even in this type of environment, I will argue that you have a pretty good margin of safety. I mean, if all goes to hell, you could almost get break even. So to conclude, we can be pretty safe on this company. I think there is a low probability of losing money in this trade. Almost finishing this presentation. Here you can see a volume profile perspective. It's a composite of the 5 years in a weekly basis. We can see that right now we are in a balanced situation. This chart only tells you where in the last years investors participate in the best. More volume, more participation, less volume, less interest. The market goes from balance to imbalance, so we can expect a break from here. The market goes to 42, 48, I will buy more, because I really think this company has a big potential to outperform. Finally, in the left picture, you can see the new replacement power that the company will launch to mitigate the losses of Revlimid. Also important to say that Bristol just bought Myocardia and gains in the transaction a medicine called Mavacamten or something like that. Well, it's a cardiovascular medicine, the treatment of a chronic heart disease, very, very important. And this drug is in the phase 3, probably will get approved in the first quarter of 2021. Also important to say that Opdivo gained approbation in January in the US and Europe for first-time treatment of several cancer diseases. This obviously could boost the gains of the company because this is the third more important product in terms of sales of the company. Well, so to conclude, the company announced an agreement with the Rockefeller University to develop and manufacture a subcutaneous treatment for COVID disease, obviously to help middle-income countries to fight the virus. Well, thanks guys for listening. I hope you like it. I know my presentation are bored, but you know, I make these videos to help me understand more about the company. And well, that's it. Thanks for spending a little of your time with me. I apologize of my rusty English and nothing more. I leave you with this phrase that I think could remind us what's going on right now in the markets. See you in the next video, and thank you so much.